Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 9th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame right now. You'll notice that we have seen a relentless continuation to the upside ever since that strong low a couple of Thursdays back. Very nice continuation here out of that compression pattern, another 2-day narrow range, and a big push up. But overall, this market remains very strong, even if we were to see the next wave of pullback here. Now that we've broken clean through those 39.85s here, and we've seen a very explosive move higher, we may see a pullback now that can take us back into a retest zone that can then be used as a jumping off point for a continuation to the upside. So right now we could see further strength up ahead overall, but we could be due some pullback. And right now at this very moment we are trading below the previous session's midpoint of 40.85 half. If the market can reclaim that level, we could see some range bound movement with an upward bias. A failure to reclaim those 40.85s could open up a continuation to the downside back to the previous session's low and perhaps trigger a bigger pullback. So again, continue to watch 40.85 half in the intraday chart. All right, let's take a look here at the NQ. Now with the NQ, this one has rallied tremendously after getting the breakout from that recent compression phase right here. Big breakout move. It started the day before April there, and the last trading day of March. We've seen a big continuation up. This right here is the high, and that's right at 13.9. Today's high is 13.841s. So almost got to that upper end of the range. And what could happen now, again, as we've talked about before, here's your key range right here. And price has traded mainly in this lower part of that key range, and now that it's broken to the upside and transitioned higher, it may now trade in the upper part of this key range, which means we could theoretically pull back as deep as 13.2 and then become a buying opportunity as it trades in here and perhaps higher toward 14.5 and ultimately up to 15K. So right now we are seeing price push below the previous session's midpoint. That's very bearish, at least in the near term, and that could open up further weakness to the previous session's low price and briefly at least become a bearish outside day. So right now, pushing down below the previous session's low, we may be looking at a continuation back toward the 13.615s, which is the previous session's low, especially if price can't get back above yesterday's midpoint. All right, let's take a look now at crude oil. You'll notice with crude oil, this one continues to trade within a very, very narrow range that has developed over time. The one thing that's interesting to note right now is that while this range remains narrow from a 12, 13, 14 day perspective, right here we're seeing a compression that's even more significant in the very short term. So there's a compression within the compression, and there could be expansion up ahead, whether it's today or whether it's early next week, we'll see. But above 60 easily opens up a push into 62 to 61.50 to 62 in this upper zone. 59 is going to be a key level to continue to watch here. If price can continue to hold 59, we could see an upside break through 60 that opens up a continuation again to 61.50 to 62, and then it trades in the upper end of this trading range here. So a breakout to the upside up here, maybe it drops back down after that, who knows, or maybe it breaks up. But right now in the short term, the next 3 points could be to the upside if price can reject 59s and push through 60. Any failure to hold 59 may open up kind of a continuation to the lower end of the range. So right now in the lower time frame, especially the 60-minute time frame, very clear compression that is developed. A very nice impulse move that has happened from Sunday to Monday as well for a key range there, but overall this one's kind of building for that next breakout phase. Pinching bands on the weekly PivotBoss bands in the 60-minute time frame as well. All right, let's take a look now at gold futures. Now with gold, this one has finally pulled back. It's had a very bearish start to the year. It's had many rejections off the upper end of this range, so it had already been bearish for a while. Over here though, failure to get a new low. Instead, it was a higher low and popped. It is now pushed above the previous pivot high, and that is the earliest sign of a potential turnaround here. It was able to briefly get above 1750, which was a good sign, again getting a new high, but it wasn't able to get through 1765, which is the key pivot there. 1766.80, that's the key pivot right there that it really needs to get back above. So here's the thing to look for as we head into the end of the week and also the beginning of next week is any pullback right now, even if it's as deep as 1710, could be an opportunity to look for a higher low rejection. That higher low rejection could be a very significant buy the dip opportunity, as it could be the one that takes you through 1765 and higher into 1820 or perhaps that 1875 level. So there could be about a 150 point move if, for example, this thing were to drop into 1725 and then bounces into 1875, this upper end of this key trading range. That would be a 150 point move there. So this next pullback could be very significant. We'll continue to watch it and see how it plays out. But overall, looking for a failed new low with a big rejection that could lead to new highs ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the day. Have a fantastic Friday and a great weekend. Please be sure to like, share, and subscribe, and I will see you in the trading room. Take care.